New home sales. That's our topic for today's Backstage Pass. Hope you're having a great day so far today. Stocks are a mixed bag today. The NASDAQ and the Dow Jones Industrial Average are both down. The S&P is up a little bit at the time of recording. Mortgage bonds have been a mixed bag as well. They were down, then they're up, and they've kind of receded off of those highs. So a lot of activity and a lot of volatility really in the markets today. Mortgage rates opened up worse today, but have gotten better so far. We'll talk a little bit more about that in just a second, but let's talk about the news of the day. So first off, we've got new home sales. This is new home sales for the month of July, and this shows signed contracts. This is data that is signed contracts on new homes. And for the month of July, the new home sales was down about 12.6% and down about 30% year over year. Now, when we look at the amount of new homes that are available for sale, at the end of July, there were 464,000 homes available for sale, but only 45,000 were completed. So less than 10% were actually completed. About 24% haven't even started yet, and about 66% are still under construction. So when you ever really kind of break down that data, there's only about 1 month supply of homes that are new homes that are ready to move in right now. Now also the median price showed that the home prices rose by about 5.9% in the month of July to about 439,400, and that's about 8% up year over year. Now, look, there's clearly a little bit of a slowdown going on in the housing activity side of things, but home prices are still quite strong. Now, when we move over to the economic data that came out today, we have what's called the market PMI, M-A-R-K-I-T. And this is a composite index that's done by the S&P Global, and this really measures activity in the manufacturing sector across the globe, and they break it down by regions and by some states or countries. So all of the data that came out of the market index, this market PMI, showed that it was all of the data points missed forecast. So they were underneath what was forecasted for each data point. And this index, since it's an index, anything over 50 shows an expanding economy, anything under 50 shows a declining economy. All but one of those data points were under 50. So some weakness in the economy and some weakness in housing data, and mortgage bonds reacted positively. So during the morning session, mortgage bonds were down about 15 basis points as this housing data and the PMI data came out and showed a little bit of weakness in the economy. It kind of flipped the mortgage bond, and then they got up to about 15 to 20 basis points up. At the time of recording, they're about 8 basis points up on the day, so they've receded back a little bit, and the 10-year yield was down about 2 basis points, trading at about 3.015. So what does all that mean as far as mortgage rates go? Well, like I said, mortgage rates opened up worse this morning, but since the mortgage bond has flipped, they've done some repricing. Most lenders have repriced for the better. And so we're at about 5.7 to 5.75% on the 30-year fixed. For a national average today, it's a little bit lower than where we were yesterday, which was about 5.77%. Now, tomorrow we've got more housing. We've got pending home sales, so more housing data. We've got more economic data with the CapEx and durable good reports that's coming out. We've also got some treasury auctions. And if the data shows some weakness continuing through the pending home sales and through this economic data, we could be putting together a little bit of a rally on the mortgage bonds, which would be good for mortgage rates, kind of keep coming back down since we crept back up from last week. So just a little bit on a roller coaster right now with mortgage rates and with the economy, but we're hoping for the best. And we do know and feel like that given the Fed's current tightening policy and everything with what they're trying to do with inflation, we do expect to see mortgage rates come down throughout the third quarter and into the fourth quarter. That's our expectation right now. Now, as far as today, that's all the news that we have for today. I hope you have a great day. Remember to stay positive, and we'll see you tomorrow.